everyone. This is Topouzian. I'm the Executive Director for Michigan Venture Capital Association, and we're really excited to have this webinar today. This is part of our ongoing series that we've been doing since middle March from the pandemic, and we've covered a variety of different topics during these last few months, but we haven't talked about angel investing and pre-seed funds and so forth, and certainly very important to Michigan entrepreneurs and the entire community. And so, without further ado, because we've got a lot going on here, a lot of registrants for this, and I'm sure we're going to get a lot of questions. But I'd like to introduce our esteemed panel, supporters and enthusiasts of MVCA, both Paul and Jeff. So, real quick, Paul D'Amato is a managing director at Grand Angels. He is a successful serial entrepreneur with more than 20 years of business building experience. He is currently managing director of the Grand Angels Venture Fund 2 and Fund 3. He's also the managing director of Trout Creek Ventures, which is a regional co-investment VC fund focusing on early stage investments. He's an active angel investor with several angel groups in the Midwest. And previously, Paul owned and operated a retail chain in the Midwest that he sold to a strategic acquirer. So Paul, thanks for being part of this panel today. We appreciate it. We also have Jeff Wesley. He is representing Michigan Rise today. He is the executive director of Red Cedar Ventures, which is a venture investment subsidiary of the MSU Foundation. Now, prior to Red Cedar Ventures, Jeff served as the CFO of Two Men and a Truck from 2008 to 2015, then as the company's chief executive from 2015 to 2017. And under his leadership, the company grew from $186 million to over $500 million in annual revenues. Yes. Prior to Two Men and a Truck, Jeff presided as CFO and eventually president of AccuBite Dental Supply from 1991 to 2005, where sales went from 6 million to over 120 million annually. So Jeff knows a little bit something about entrepreneurism as well. Paul, Jeff, thanks for joining us today. And like I said, really looking forward to our conversation, and I'm sure we're going to get some questions from the audience. To the audience, I would say we've got a chat function. Certainly, we've got a Q&A tab in here as well. Please enter your question, and we will, if I see that we're getting a lot of questions, we'll try and stop our conversation a little bit early to get to a lot of those. So we are recording this, and this will be available on MVCA's YouTube channel at a later date. So we're going to jump in, Paul and Jeff. Paul, I'm going to start with you. We're going to go alphabetically. So tell us a bit about Grand Angels and maybe describe your organization for the audience.
Sure. Yeah. Thank you, Ara. And it's a pleasure to be here today. And I'm happy to see so many participants join us. The Michigan Capital Network, which is what we're calling our organization today, runs a series of committed capital venture funds and organizes local groups interested in early stage investing all across the state to support the Michigan ecosystem. Our venture investments come primarily from the Great Lakes region. Members in our local groups, some of whom are LPs in our funds, meet monthly to learn about early stage investing, how to network with each other, to build social connections, and to hear company pitches brought by our trusted partners like Michigan Rise and other groups in the area. Our goal is to educate, grow, and diversify the base of early stage investors in Michigan. Like Ara said, I'm the managing director of the venture capital side of our business, and I run 3 funds, which is soon to be 4 funds. They are traditional committed capital venture funds. Janet Wiley is the executive director of the angel side of our business and runs 4 angel groups, including Grand Angels, Flint Angels, Kazoo Angels in Kalamazoo, and Woodward Angels in Detroit. It's a pleasure to be here today, and I'm happy to answer any questions that I can.
Oh, there's going to be lots of questions, knowing the size of the audience, and I appreciate that. Thank you, Paul. Jeff, tell us a little bit about one of the many organizations you're part of. You do represent a few of them. So maybe let's talk about what, we're going to talk about Michigan Rise. So why don't we talk about that?
Well, first of all, it's great to be here with you and Paul today and share in this presentation. And first, I want to thank you, Ara, for all the things you do with the Venture Association. Your impact is pretty incredible, and it's great to collaborate with you as part of this big ecosystem we have. To give you a little background on Michigan Rise, we're really the third iteration of this pre-seed fund. The first fund was run by Ann Arbor Spark. The second fund was managed by Invest Michigan. So we are the third iteration that collaborates with the Michigan Strategic Fund and the MEDC. They're great partners, and we're so fortunate that we were awarded to be the grantee this past year, and we launched the fund in August. So our role out there is to fill that gap funding for those high-tech, high-growth companies along the pipeline, try to coach them and provide some funding that'll make a difference to help them get commercialized faster. We're based in East Lansing. I don't know if it's important today in this virtual world, but that's where we're at. I'm just part of a 4-person team with Michigan Rise. We have great talent with Preem Badagala and Hunter and NASA, the 2 analysts on our team. So we're just happy to be here, happy to share whatever we can, and just very fortunate to work with great people like Paul.
Awesome. Thank you. Thank you, Jeff. So let's just ask the first obvious questions, because this is what's on everybody's mind, the types of deals that you're sourcing, how do you track them, and so forth. Who wants to go first with what are you looking for when you're sourcing deals? Paul, you're smiling, so you've got an answer ready for us, right?
I'm happy to answer that. Ara, thank you. Yeah, I mean, or at least I'll give you the lead in for it. It's a long discussion probably, but from a venture capital perspective, I'm interested in companies with excellent teams and with a product or technology that has a high barrier to entry. Often this is in the form of patents, but sometimes trade secrets or other types of competitive barriers. To be honest, relatively few businesses are really venture backable. Venture capital looks for companies that will generally double in enterprise value each year. So it's 100% year-over-year growth, which is difficult for many kinds of businesses. The majority of our first investments are either a bridge to an A or an A round. So sometimes that's later than people think when they think of an angel group. And if we include follow-on rounds, 15% of our total deals are bridge to an A, 35% are A rounds, and the rest, 50% are B, C, or D rounds, which speaks a little bit to our organization that not only are we invested in starting investing with a company, but we're there for the long haul. We've been involved with companies as long as 11 years before getting to an exit. It's not our objective generally, but it happens. And I guess as far as tracking deals, we maintain a pretty extensive database internally. Salesforce and SQL Server system for that, but I don't know if that's that. I don't need to probably go into how we actually get to the nuts and bolts of that. That's a little bit about what we look for and how we track it.
Okay, Jeff, how about you?
Yeah, if you start first at the blocking and tackling part, when we meet a company, we're looking for first the team. Is this a coachable team? Is this a team that has some relevant experience that can lead the company we're looking at? Then you go to the customer. Do they have some customer traction? If they don't have customer traction yet, have they done some really good customer discovery? And then, like Paul said, we're looking for a big market. Is there a big market here that could be venture ready at some point? That's probably the next box. Then after that, we're looking, do they have a product? Is there an MVP? Or is there a path to revenue in the very near future? And then finally, we're probably looking at unit economics and getting our arms around that. But those are typically the boxes we're checking as we look at those opportunities. The types of deals we see all types of deals. Our focus with Michigan Rise is high-tech, high-growth companies. The companies we see, as you probably follow in Michigan a lot, are life science companies, IT companies. We've got a cyber company in the portfolio. We're also cognizant of the Michigan Strategic Fund and the MEDC's app. We're looking for those advanced manufacturing companies, advanced mobility companies, again, life science and IT. As Paul said, it's probably not that exciting, but when you look at the processes, you can go to michiganrise.com, you can see our criteria, you can apply there, put all your information there. It's integrated with our Salesforce model. We track every relationship that we meet, because a lot of times it's not about whether we can fund them now. We want to provide them to the whole ecosystem, connect them with the SBDC, the VAF funds, other things that could help them. So we try to really cultivate the people we meet and try to make a difference, even if they're not fundable at the stage of our first meeting. So that's kind of our process and what we're looking for.
So Jeff, Michigan Rise received the sort of the go-ahead, the funds this year, like you said, from the MEDC. So maybe this is an easier question for you than Paul, perhaps. But let's get the elephant in the room out of the way and just address the pandemic. I don't want to focus on that for our discussion today, but certainly it's got some impact, a little bit maybe. But for you, for Michigan Rise, has that affected what's been going on as far as sourcing deals for the fund?
It is. It had a huge impact. First I salute all the entrepreneurs in the state. They're incredible people that are working so hard, and then you throw COVID in front of them. But I guess it shouldn't have been a surprise to me, but it's funny how many of them have powered through it, looked at it as an opportunity to pivot their company, looked at the benefits of it. Where can we pitch virally versus pitching in person? They've really taken advantage of a bad situation. Yeah. With our fund in particular, we were awarded the fund in April. We launched in August. So there was a big gap there. We used that time very wisely before launching the fund to build relationships and really reach out to angels and others and to see what was in the pipeline. There was a few companies we had an opportunity to really help, which I'm grateful we had that opportunity, that probably would have gone on to bigger rounds with VCs that pulled back because of COVID. So we provided some very timely gap funding, and even beyond that, some relationships and connections that I think we were having an impact with those companies. Yeah. So, it's been a strange year, but I do admire all the grit and the resilience of everybody out there. And we got some great entrepreneurs and great leaders that are just kind of powering through it like they do every day with everything they do.
Yeah, I would certainly agree with you. And certainly the timing, probably for some couldn't have been better. Paul, how about you? How is this, how's COVID affected the work you're doing?
Yeah, well, like Jeff said, it really goes to the strength of the team or the company. We're fortunate that we've got excellent teams running these companies that we've invested in. These CEOs have pivoted if that was necessary, or taking whatever steps are necessary, and a lot of them are going to come out of the other side of this stronger and better than they were when they went in. It's really exciting to see. From a financial perspective, we're doing what we can too. So we're reinvesting in our portfolio of companies that need it. We're active in helping them in other ways if that's necessary. From our own organization, from I suppose what my job is, we've been fortunate that we're able to still conduct business on Zoom like we are right now. And I know that many businesses in Michigan are struggling, or they're unable to do that, and I sympathize. Fortunately, we're able to continue to do what we do, and continue to fund and support Michigan companies and help the Michigan ecosystem.
Great. So let's talk about Michigan for example for a second. What is that ratio of deals between Michigan and out of state that you're both looking at? Paul, how about you first with that?
Sure. So like I said, we are regional investors, so we do invest in Michigan. We also invest outside of Michigan. The vast majority of our deals are in Michigan. To date, for this year, I've looked at more than 2,000 deals. Many of those are outside of the state. And of those 2,000, we've done some serious level of due diligence on approximately 300, and then invested in 6. So that's a pretty sharp funnel. Of those 6 deals, 4 of those are Michigan companies. One is based in Chicago, so fairly close, and from my house, probably as close as Detroit in some respects, but, and then one is on the West Coast. That's, I don't know that ratio is terribly representative of our portfolio. In the past, I would say of our total portfolio, out of about 45 active companies, probably 5 or 6 are outside of Michigan. Some actually started in Michigan and relocated. But the majority of our companies are in Michigan, but it helps us to see other deals outside of the area and compare those. Sometimes I would actually say the one that we just invested with the West Coast does have a Midwest presence. So their central offices there, the CEO is on the West Coast, but they have a strong Midwest presence and they're selling through to hospitals here in Michigan and things. So we really do take that into account when we look at deals.
Jeff, is my assumption right to say for Michigan Rise, they all have to be Michigan deals? So it makes it kind of easy for you, but are you getting outside of Michigan that's contacting you that's interested?
Yeah, we are getting people that contact us outside of Michigan, but when it comes to Michigan Rise, our deals are Michigan deals. Our founders and companies have to be Michigan companies for us to be able to invest in them, or the majority of the employees have to be Michigan focused. We have seen, just to give you a flavor of what we've seen since August through our website, we probably have seen 75 to 80 applications. We've funded about 10 companies so far. So it's about 10% of everything we've seen that's come through the website. We've been in a position to fund. We've funded quite a few since August already. So we are anticipating probably doing close to 30 deals a year out of Michigan Rise. So I think that's going to be a big impact. So really proud of my team and the hard work they put in place. And I'll say it again, for everybody that reaches out to us, we try to also just throughout this ecosystem, get in contact with the SBDC or Smart Zones or other folks that can help them if they're not in a position to move forward with us at this point. We really want to try to make that difference too, because we know that they could come back to us down the road. So
right, what you both have just really shown, I think the audience too, is really the importance of how rich the pipeline really is. I mean, it really goes to the point where there's really not enough funding to really go around for all. And Paul, you said 2,000 inquiries, and Jeff, in a relatively short period of time, 75, 80. I mean, there's quite a bit out there. So I mean, it's good news, but something to kind of keep in mind for everybody, that's something that we're missing certainly in this state is some more investment, more dollars to really go into these entrepreneurs. So let's talk about some of these entrepreneurs. You both use the word teams, and certainly when I talk to investors, that's really important in what they're looking at when they're considering jumping onto a potential company is really the culture of the team. And what types of things are you both looking at? Jeff, I'm going to ask you first. I mean, you've come from some pretty big teams, and culture obviously was really important. What do you look for when you're talking to startups?
First, team is everything. The person's attitude is everything. When that person walks in the door, is this somebody I can engage with? Somebody I can coach? Will they listen to advice? Have they gone out and got advice from lots of people that they can reach out to, or are they set in their ways in terms of what they want to do? I don't think you can make an investment if you can't check all those boxes. You can have the greatest technology, but I really believe in leadership, and I really believe they set the stage for the whole culture and the team. And I think that's a key element of de-risking any opportunity, is to know the person that we are going to partner with, we can work with and take to the next level. Everybody uses the term it's a marriage. I think it is a marriage between the investor and the leadership. We got to be able to work together on a day-to-day basis and be aligned if the company is going to be successful.
Yeah. I could make a joke there and say, well, wait a minute, when does marriage involve someone giving somebody else money? But that we'll leave that alone. Paul, what would you add to that?
Well, I would say it is like a marriage, but you can't get a divorce. So,
There you go.
but you know, I think it's the one thing I'd add is it's probably as important for the team to do their diligence on us as investors as it is for us to do our due diligence with them. So we need to work together, and if they think that they can't work with us, then I'd rather know that right up at front. We're probably going to work together for 5 or 6 years. That's the average. It's a long time. And it's not always going to go in a straight line. Sometimes there will be tough things we'll need to work through. Sometimes it'll be great. Hopefully it's great all the time, but that's generally not how it works. And so we need to really know that it's going to, that we can talk and communicate and be open. We want to add value. We're here to add a lot more value than money. And so we need to know how, if we are able to do that. Sometimes we see teams that say they already know everything, and that's probably just not true for anyone. And so that just might not work for us either. So
right.
yeah, like I think like Jeff said earlier, they need to be open and coachable, and we need to be open and coachable as well as investors.
Paul, to continue on that theme, let's talk about maybe some of the challenges that you guys see when you're working with entrepreneurs and startups. I mean, what is it that you're facing? I mean, is it the lack of proper disclosure? Is it, you know, a bad deck? I mean, what kinds of things, and maybe word it in a way that this is advice, certainly for all of our entrepreneurs that are watching us today talk.
Me?
Yeah, why don't you go first?
Okay, sure. So this is a great question, and I would say not all, but some entrepreneurs are very hesitant to share information with us. Sometimes they are unwilling to share financial information or co-investor information or other details of their product or service. And I love this question because it gives me another opportunity to say publicly that neither Grand Angels nor Michigan Capital Network are in the business of stealing your idea. We've been in this business for 15 years, and we would not be in this business any longer if we started doing that. So we hold all the information you give us confidentially. However, I've got a job too, and part of my role is to do due diligence to best represent our investors. Mm-hmm. And if we say we need 10 pieces of information, we get 5, I can't make a decision. I just can't do it. And that's how it goes sometimes, or, you know, and so sharing due diligence, which I know is difficult on the entrepreneur, they're trying to run the business and do things, you know, and I understand that, and we'll work with them on that. But it can slow down our process. And in the past, it's also just killed deals where we just couldn't get the information we need, and we just had to pass. It's, you know, if I've got X pieces and I can't get them, I can't tell my investors that I've done my due diligence. I haven't done my job. And so I really appreciate you bringing that up, because it is a concern, and I really understand where the entrepreneurs are coming from. So I want to say again that we hold your information sacred and confidential.
Yeah, I think that is certainly a good point to make, and I've heard that from many investors, and hopefully entrepreneurs understand that. Jeff, what would you add to what Paul said?
Yeah, I'm going to go back to some of our earlier comments and bring it forward again, just to kind of set the table. Mm-hmm. Look at the number of opportunities Paul and I see and how many we actually move forward on. That's a pretty busy schedule. So yeah. You're only going to get in front of people so often. So like anything else, when you get in front of somebody, you want to put your best foot forward. You know, so if you go through the things we'll see, somebody wants us to come and invest in an idea. They don't even have a product. You know, somebody will bring us a deck. And if you see how many new startups are out there, you want that deck to be really polished. You want to practice your pitch in terms of bringing it to us. You know, you'll see somebody bring a deck and there's no financials. They have, you know, it's not their core competency. So they really haven't spent time with it or go and engage somebody to understand what the financial model is. You know, it's premature to do that. You know, so I think I celebrate innovation. I love entrepreneurs, But if you're getting new into this business, reach out, get some help, get some support, make that first opportunity or that first engagement to meet somebody that can help you. Do your homework so that
Yeah.
everything's in order so you can get the best chance of success.
That's so true. Doing your homework is really the leave behind for a lot of these folks. And I would recommend, a couple of things. Certainly, Jeff, you talked about the MEDC, great resource. They're here to help the state's economic development organization. Certainly can look on our website at michiganvca.org. We have a landscape guide that we do just to kind of give us a little plug, and we're about to release the new version of that online. But that's a good resource because it's, I've told you both offline, we get certainly a lot of inquiries from entrepreneurs that think we are a fund ourselves, and we're not. But we are a good resource for entrepreneurs, and that guide is pretty helpful for startups, especially. It not only shows who are MVCA members, but it also shows different resources where that they can go to, whether it's a Ann Arbor Spark or a Tech Town or a Ferris wheel. I mean, these are organizations, to Jeff's point, that entrepreneurs, startups really should take a look at and do their work before they send information out to you folks.
I
So
put a plug on too as part of that is to the community out there is just accelerators. There's some great accelerators. We run 2 of them. That's a great place to get your feet wet and really get some good mentorship around you, some good sharing of ideas, some valuable time. Seek out those accelerators too. That's a great spot to start.
Yeah, definitely an excellent point. So let's move and talk a little bit just about Michigan in itself, the entire environment for angel investing and some pre-seed funds. I mean, what do you think overall, the environment is like here for all that? Is it getting better? Is it, I mean, we often say we're not a comparable state to others on the coastal regions, but we've always talked about that when it comes to venture capital. How does that apply for angel and pre-seed money? Who'd like to, Jeff, why don't you go first about that?
Yeah, I think it's a great question, but I think you also have to put it in perspective. Show me gray hair here. The state has come so far. If you go back years ago when, I first became an angel in Lansing and then in Ann Arbor, there wasn't as many startups. They weren't as high quality. Now you fast forward to the environment we have today. We have such a bigger number of great resources. We have expanding angel groups that Paul is working on. We got 2-3-time entrepreneurs that have been successful within our group. We're starting to get some national recognition. So I think it's all about momentum, and I'm really proud of those people that have done so much in the past to get us where we're at today. Is there still challenges ahead? Yeah. It's kind of that rising tide approach. When you have higher quality startups and more startups, it's a lot more competitive. Right. So that's one of the challenges we have today, and companies have, is you might have got funded 10 years ago. Now you're competing with a lot of other ideas, and it's more difficult. And then you see the natural tendencies of everybody to kind of go downstream a little bit with success. But when we took on Michigan Rise, we reached out to a lot of the angel groups and tried to connect with them, and are always trying to stay engaged with them. They reinforced to us, stay in that space, help those early startups, get them funded, and we're committed to that. But, with all the good things that have happened, I think it's all great. But I still think as we move ahead, we have to be cognizant, where can we do better? How can we help more entrepreneurs? How can we collectively work together more to have a bigger impact? But really proud of so many people that have done such good work over the number of years we've been going at this.
Paul, what do you think? You've also, you also do some venture deals too. So you've got, some extra perspective that you could add to this.
Yeah. Yeah, I appreciate it. There are a lot of great organizations in this state that are really making a difference. And there's some, like Jeff said, there are so many more than there were. And I would add MVCA to that group. I mean, you're organizing these groups and coordinating it and putting together websites of guidebooks, basically roadmaps on how entrepreneurs can interact with our organizations, who to call first, who to call second. And sure, we run more than angel groups. We run venture funds, and that's a logical extension, but it's necessary. And we've been successful with that. We've got 3 funds. We'll raise a 4th. So we're very involved with that and committed, but we're not the only ones. There are a lot of great organizations here, and we work together. From the outside, I suppose it's natural to assume that we compete, and that's not really true. We work very closely together. As before the call started, Jeff and I were just talking about a deal we're trying to collaborate on, coordinate. Neither one of us has enough money in our organizations to really take the company where it needs to go, and so together we're gonna see if we can make that happen. It's the network, it's the individual groups, sure, but it's also the network and collaborating and pulling all those together that really makes it all work. I think that's come a long way.
And I think that's important. You've really touched on what we were going to maybe cover next, is really how you do work together. We had a few chats earlier on that Peter from Ripple thought it was an investor meeting, because obviously you both are working with his organization. So it's good for folks to know that that there is a lot of partnership going on. So I think we're going to try and take some questions from the attendees. We have one. I invite everybody to start entering some questions in here, and we've got a few more minutes to really cover that. This question comes from Kevin. Kevin, how are you? He says, in addition to bringing capital to a company, can you give us an example of the value add you may offer to them? Example like introduction to customers, other business advice, that type of thing. Who'd like to answer that?
I'll jump in there. Sure.
Okay.
So yeah, absolutely. That's a big part of what our value proposition is as an organization. So beyond a check, like I said, we run 4 angel groups and spread around the bottom part of the state of Michigan. Those members are all accredited investors. They've all been successful doing one thing or another, and collectively they have an amazing network. And what we try to do is make connections through that network to decision makers that could really help our portfolio companies. So make introductions to auto manufacturer, tier ones, hospitals, other groups. Many of these principals are involved in our organization at one level or another. And so we want to make those introductions for both sides. Those companies are interested in learning about new technology, and of course the technology innovators are interested in connecting with those. So it's a very active part of our organization. So certainly introductions and networking is exactly a piece of that. Yep. Like I said earlier, future capital as well. So we're actively syndicating all of our deals with other groups, both inside the state and outside the state where we can. Well, we've been successful with some exits, so we've got some track record and with some private equity groups and some investment bankers, if that's the direction that groups want to go. So yeah, we're in it to help at any level, and wherever we can, we're trying to add more than just a check.
Yeah. Jeff, anything you'd add? I would think it's probably pretty similar to you.
Yeah, I would agree the same. I guess the other part I'd say is a lot of times we deal with companies at even an earlier stage that have more needs. So, we have people like myself that have run companies. We've done some things right. We've done something wrong. So we can share some of that. We can get involved in strategy. We can hook them up with people to help them with their financials, to build out their projections. We can connect them. We're very fortunate. We have a lot of university connections. We can connect them back to people with research. We have a lot of hospital connections just because of the nature of our ecosystem. We can connect them there. The one thing, so there's so many examples of what we can do, and we try to do that as much as we can, because like Paul, we actually score ourselves on that. That's something that we look at our balanced scorecard and say, how are we impacting these companies? Let's keep score of that to make sure that we are intentional with that. So I think that's a really important aspect of Michigan Rise is like many of the funds we run, we want to make a difference. We want them to get to commercialization faster. We want to give them the best advice and share best practices. We also are very intentional about We want to have a diversified and an inclusive fund, and we want to touch all parts of the state. So there's a lot of things we're doing as we make those connections and provide those valuable services to score ourselves, to make ourselves accountable, just like the entrepreneurs, to do our best.
Terrific. All right, we've got a question from David, who wants to know if either one of you are utilizing crowdfunding platforms to find deals. Are you? No? Yes?
We have not. I guess maybe it depends what you mean by crowdfunding. My definition of it, anyway, we haven't been involved in that. Sometimes a crowdfunding platform can create a fairly complicated or intractable cap table. Not always, but there's a chance there. And so if that's the definition, then no, our organization hasn't.
Okay. Jeff?
In some of our deals that are probably not the more venture-like deals, we've had some opportunities to get them involved with crowdfunding, with the idea that seemed like a good platform for the nature of the product. Consumable product or consumer product that might fit that model. We've done some work with that, yeah.
Okay. So we've got another question for Peter. What's your view of venture debt? Under what conditions and at what stage does it add value?
Well, sure. So venture debt is, many of our portfolio companies beyond a certain stage have brought on venture debt through Silicon Valley Bank, which is pretty common, or some of the others. On average, I guess, where do they come in? Maybe a $10, $15 million, post-money range might be something where we start seeing it. I don't know, I'm guessing a little bit at that, I think, but generally not at the early stage. But venture debt plays a role like any kind of debt. And Silicon Valley Bank and those have stepped in at a point where they charge a little more in interest because they're taking more risk than a traditional bank. I think it can work. With debt comes increased risk. So as you take on debt, you are taking on more risk, but there can be times when that's appropriate. So we've absolutely been part of that. And we think that's appropriate. Just go into it with your eyes open and talk with your board and make sure it's the right time for your company.
Excellent. This message comes from Stephen, wants to get your definitions of life science, what a life science investment is. How do you all define life science for the work you're doing?
I guess the definition would be around healthcare space, therapeutic companies, med device companies. That's where I'd probably put it.
Okay. Paul, I think you would agree with that, probably.
Yeah,
so yeah,
right on.
Definitely. So this is a real good question. This is from Farouk, who says, with so much emphasis on teams, what pros and cons do you consider a solopreneur raising capital? Who'd like to tackle that first?
That's a great question.
Yeah.
That's probably one of the hardest things, I'll just be honest, is I worry about as a solo entrepreneur. I've had some great entrepreneurs come into my office and I've tried to work with them, but the lift is so heavy on a solo entrepreneur to get a product commercialized and be successful. So when I do see there's some, if it's the right person that I think this is an investable opportunity and they've got significant experience, we quickly pivot to how do we build a team? Because no matter what you start with, you have to have a team to get the product to market. And sometimes it might be just getting some advisors involved right away, but it has to be about building out that team concept.
Paul, what would you add to that?
Well, I totally agree. I think everybody can agree. You really can't do it alone. So but everybody probably starts with basically one person or a very small team, maybe two, so it's really about your plan on how you address that issue. Who are you going to bring in? Where are you going to find them? Have you identified them already? Are they excited about it as you are? Are they going to be a good fit? So these are a lot of questions, and those are pretty important questions, and getting involved with the wrong partner early on can be a problem. So you want to really be careful about it.
Right.
Yeah, I would say to that too, but on that last note, there's a mistake. Protect that equity. You'll see a lot of people that want to take your equity and give you services later. Just run, please.
Yeah. We're getting some real good questions here. Lewis wants to know, prior to making an investment, do you already have an exit strategy in mind?
Yes, we do. So that's a big part of our due diligence. It's not the it's not the top one. So it's the team, it's the product, but somewhere down the way is the exit. I represent investors, so my job is to invest money and then return more than that to our investors. And so we got to get to an exit somehow. That could be just a private equity rollover where the team is really a non-event from the team's perspective, or something else. It could be an IPO. A lot of ways to get to an exit, but it is part of our strategy, and it's absolutely part of our due diligence process. We want to see how you get there. We want to be clear on that before we start.
I would agree 100% with Paul, but I'd also add, don't underestimate the homework again of going through that exercise and seeing where those paths are and how they help you develop your strategy and your plan. You have to think this all the way through. And even if you don't have it right from day one, you continue to assess that and develop it. It's going to make that opportunity more likely to happen. But I think that it's important to do that versus, as part of the process and part of the leadership skills.
So this question comes from Dave. He'd like to know, what are typical terms and conditions you prefer for debt to equity instruments, and up to what investment level do debt to equity instruments give way to priced rounds? It's kind of a loaded question of sorts.
Typically we do convertible notes, safes, and equity. The majority of the deals early on we're doing are convertible notes. There's a lot in that question, so I'll make sure.
Right.
When the round is somewhat determined by the type of company. Are we dealing with a therapeutic or an IT company? Where are you at in the stage of success and your financials? There's a lot of factors that go into when the next rounds are put in place. So I think
sure. It is a really good question, and I'll do the best answer off the cuff. So we generally do convertible notes or equity. We're generally not investors in safe agreements for a few reasons. But so from a convertible note perspective, typical terms in this market tend to be an 8 to 10% interest, a 20% discount on conversion, and maybe approximately an 18-month maturity date. Usually with a cap. So cap is determined loosely on what you think the value might be in that 18 to 24 month period, approximately when the maturity would come through. So that's typically how we look at it. As far as the last question on what's the upper limit to a convertible note, I have not seen one. We've been a part of couple $100 million deals that still have convertible notes going into the next round. They're companies with post monies of a couple $100 million that still have convertible notes. So I don't know if maybe there's one that's there, but we haven't seen it. And so, I don't know. They make sense in a certain place at a certain time.
Okay. Kevin has got another question for us, and I think it's a good one too. Do you weigh a deal more favorably if they've raised prior VC funds?
To a level, I'd say that having co-investors is a benefit. Yeah. So I don't know that it's necessarily has to be venture funds, but having co-investors is a benefit. So like I was saying earlier, we want to syndicate deals. We syndicate 100% of our deals. We're not trying to be the smartest people in the room. I would much rather put 1/10 of our money in 10 deals than 100% in one. And so if we have other prior investors, I think that's good. I would say that could be even better if those prior investors have particular industry knowledge. So if they are a life science investor and you are a life science company, then at first blush, that would give me a little bit of confidence. Additionally, if they happen to be a venture fund that we've worked before with and we've had good experience, then that's also a nice vote of confidence.
Okay. This question comes from David. I think it's kind of a good one for us to end on. We've had a lot of great questions here, but this is actually something that I've gotten offline at times. Given that both of you see a lot of deals, what's the best way to get in front of an angel investor, especially if you've worked through the network already?
A specific angel investor or an angel investor group, I guess. As far as an angel investor group, I mean, send it to me. We'll we'll talk about it. I mean, we see a lot of deals. I can't guarantee we'll do, we'll go forward, but I mean, definitely we'll look at it. If it doesn't make sense right now, we might look at it later on. But there are a lot of angel investors. You might find them, I guess networking through it is probably the smart way. Incubators and other places are good sources for people that might be interested in investing locally.
Well, and I would add again, the landscape guide that we put together is a directory that has most, if not all, the angel investors in the groups that are in there. Both of you guys are certainly listed in there too. And I would tell folks that if you're interested in contacting both Paul and Jeff, the way to do that could be through that guide. I think the importance of us trying to get folks to look at that guide is really based on what the two of you have said early on is, do your homework and look for the right investor that is going to, it's got to be a marriage, of course, but it's also got to fit what you're doing and what the investor is looking for. So again, I would put that to guide for people to go to. Paul, Jeff, we're like running up against that 1 hour mark, and usually we're good at this point, and wanted to give each one of you any kind of final thoughts or pieces of advice that you'd like to leave today that'll be permanently in the archives of YouTube when we release this.
Wow.
Wow, I know. A lot of pressure.
There's some pressure.
A lot of pressure. Any final thoughts?
I'm excited about 2021. Happy to put 2020 in our rearview mirror. Our organization is healthy and growing, and we want to invest in Michigan companies and help build the Michigan ecosystem.
Yep.
Yeah. I would say the same, and it's just a pleasure to be here again, and thank you for having us. It's an opportunity every day, and I think even in the midst of COVID, there's opportunities. I think Michigan's headed to a great place with startups and new innovation. I think next year and the coming years are going to be great. So for those interested in this space, please take advantage of opportunities and seek help, and let's just have more success together. So
great. Jeff, Paul, thank you for being on today. It's a pleasure to talk to you guys as always, and certainly wishing you the best luck for 2021 as well, and with your funds, and to all that are watching and listening today, we want to thank you for taking the time to do that. Again, I'm Topouzian, and if you want more information about Michigan Venture Capital Association, we invite you to go to our website at michiganvca.org. And until next time, we will see you soon, and take care, everybody. Thank you.
Thank you.